Right now, somebody with incredibly deep pockets is buying December calls on gold on such a scale that the volume is an absolute outlier. I unfortunately don't have the tweet with the diagram. Maybe if you have a diligent team, they can find it and they search for it and put it in the edit. But they are buying December, that's the end of this year, basically, call strikes at 15,000 and 20,000. That means they only start to make money above those numbers. And those would be considered probably relatively cheap, but they're being bought on such an industrious scale that it smells like somebody knows something and is prepared to take quite a wild card bet. Now that sounds like a 4x from 5,000 plus in a single year. We could be talking about a year of crisis and it's coming. Where did that happen before that makes us even noteworthy? Maybe it's a clown with a lot of money who likes gambling. Okay, well, the same thing happened in the silver markets when we were in the late 30s, early 40s, and then dribbling into the early 50s. There was, from I think it was February or March, incredible call buying at the $80 and $85 mark, outlier volume. All of those ended up deep in the money on the spike. So somebody's informed and somebody plays. And I've never believed in there's no insider trading and there's no levels of people who actually get real benefit. So it's not a destruction of a fairy tale I've ever clung on to. So, but I do watch what the big money does, and volume in technical analysis is an amplifier. I often say when we're teaching in our program, the guitar makes the music, but if you want to be heard, the amp is the volume. Meaningful things happen in big volume because that is very well informed big money. And they often know more than you or I. So I'll leave that with you as somebody else's forecast. And I'd like having the lottery ticket on that side. And I'm quite happy to trade even if it doesn't do that. I'm quite confident it's going to do exceedingly well. So even if it misses that, I'm expecting at least as good a year as last year, if not more. And the problem with Contagion, Maggie, is it gets disorderly. Because what happens is me and you are talking and we're both kind of interested and we watch this regularly. We are the early adopter part of the curve. The normal part of the curve where everyone starts to realize what's happened is when the panic happens. And that's when unobtainium happens for all metals. Platinum, silver, gold even can indeed occur. And a whole bunch of awkward truths might come out of the closet. And you'll feel the American emperor, those who've represented you, have worn no clothes and told many lies. And I fear that's the next chapter that's going to be playing out. Yes, and I don't want to pat myself on the own back, it's very arrogant, but we were very fortunate to have got square and out of all longs just before that
What
crash.
made you do that? Because you're so bullish.
Yes, and we shared that even on X, and I'd done an internal the night before update, an emergency update to my community. And this is the value of being technically based. So here's what's done, and I'll talk people through this, and I can even share for you to include in the edit, the tweet that went out. I was riding, funny enough, in the desert the next day for 4 days. And I did it, I thought, well, I'll tell everyone else and who's Freeview as well, but I'll just put a tweet out. And you could have still got out at 111 and you ended up trading, I think, as low as 64 on silver when that happened. So I'll include that on you. But before that, the night before leaving for my 4-day excursion in the desert, we did a all long close on the leverage side. In terms of investment, I'm absolutely disinterested in any medium-term volatility. I warn everybody you should expect that. Every now and then you're going to have contagion runs where everybody gets, oh, this is good, we're going on a charge, this is how it looks, and that you're going to have a charge. You're referring to this period over here, by the way. And also, we came back on the 4th of February, having left in the early morning of the 30th. I'm also going to point out that we are currently very much in the reflation camp, and this is a once-off strike back that had occurred. But let's just we were very aggressive in the silver because that was now the silver-gold ratio was dominating, and it is also the more volatile one. So it's kind of, in a sense, almost the more impressive call because you would have taken a pretty beastly hit. What started to happen, our last setup here, you were squeezing higher. You got this first warning strike over there, and then you went into a rising wedge, and then you got a second warning strike. And that was these candles. I do weighted candles, so by volume, so people can see that those were backed by some volume. in terms of that. And then it gave you a final return move to the rising wedge with the volatility. And we'd just been getting a lot of margin hikes and everything. So it was becoming a bit too hot an area, immense amount of margin hikes. I remember it was quite ironic. I was with one of my community members who was visiting me here in Cape Town, and we were driving over a mountain pass, and my broker called on, when you're on the earphone, Francis, you've got these amount of positions in your door. We need to phone and tell you that, your margin's going to go up about 5 times on this. You're still fine, because I have a lot of open margin. I had a lot of capital in there. But I just need to warn you, and there could be more. And not only did they do that one move, they did the more move as well, where it did become an issue. But anyway, that all happened in the build-up to all of this. So things in silver were getting super, super hot. So we closed out here, and that was on the 30th of January, and we were very grateful to do that. And the technicals pointed to it. And also the buys. It was getting a little bit too hot to do that. And it's going to do this all the way up. So anybody who's choosing to do leverage trading on precious metals could lose everything if you don't understand stop losses and you don't have technical analysis and method. It is high risk. For most people, that if you don't have the time and you don't have the inclination, if you're not in a well-informed community and you're educated on this, you're probably best just being what I call blue pot, which is investment. But if you do it right, we've been burying an inordinate sum into our blue pot from trading profits. So we always do the triangle, the red pot, the orange pot, light leverage, and blue is investment. And we always tax down. So the goal is everything ends up in investment, and it almost ends you're playing for extra in the leveraged areas. And you must have method, and you must understand stop losses, because if you got in late and you were chasing in on mad hype and you got into a point over here and you didn't have a stop loss, small fortunes could have been lost on the downside just in a single event. And that's an absolute tragedy. We had a short spell of dollar strength. That was a good non-farm number. I don't believe a word of it, as you can imagine from my framework. And also a fairly benign CPI number. And that was after the dollar. And I do need to make this point. The Dixie has fallen out of, before we go into the weeds with gold again and the gold euro. Let me just make this point technically so you see a visual of this. The dollar has fallen out of an 18-year bull trend, and I need to show you that just as a reminder, because it sounds like I'm just dissing the dollar and like some big hater of that particular fiat. Not at all. It's, as I say, it's by design. There's quite a bit of technicals, but you might see this dashed red line over here. This has been your 18 years since 2008 trend line. And you were in this trend channel. I do need to go back to log scale because it's gone a little bit cockeyed there. Let's do it. There you go. That's your trend, and that is the 100 level that I put in blue. Now, you have a couple of setups with downside targets in the Dixie. So that means even in the leprosy world of contaminated fiats, the dollar is one of the scabbiest lepers, I'm afraid to say, if you'll forgive the phrase. So there's more downside in this, and I will show you that. You have been, in the fiat world, benefiting from your Chiffin's dilemma where you were getting inflated. You can see since the crisis of 08 and the proliferation, actually the dollar has had moments of dominance, but it reverted, it stayed in here. We have now broken to the downside. I'm going to drop the time frame on that and just bring you into shorter term, because some of you would like to also know the trajectory of the dollar with a strong US audience. And as I say, we are bearish here. And many people say too much. They feel, well, we sold off too long. They think there's a certain time frame. In the big cycles, you've never lived or seen a big cycle unwind. Everything is a typical frame of reference. Oh, you have one good year, you have a bad year. No. There are cycles where it just comes bad, because you don't know how good you've had it for so long. You've been a consumer nation at the cost of everybody else. You're the fat guy on holiday who keeps ordering burgers and chips, and the Japanese guy, the Chinese guy are bringing you food, drinks, and resources. The European Frenchman is bringing you wine. The British person's bringing you a Land Rover or whatever he does, and you've been putting it on your tab, putting it on your paper. And now they're saying your paper ain't good for it. We need a hard payment. So this is on that 18-year trend line, which has broken the dash line. What I'm drawing here is a bear flag. And you can see you had a rally off it. You only made half mark on the flag, and you're now down. And you've had this return move moment. And I think you're in that right now.
Mm.
And that's another reason why the way Bitcoin is failing so badly, because the dollar's actually been quite weak. It's supposed to be strong and dominate in there. So we've got a flag set up with quite a low level at 87, and we're expecting further downside. Of course, it can rally all the way back here, but you've now fallen on the wrong side of that line. You tend to return move and then roll over on new events. So the dollar is vulnerable. Your question was, what's the big trade? Is it gold, silver, and all of that? And I took you into the weeds of the gold. But to take you back on that, we've had that rally moment, return movie type moment of the dollar. And in actual fact, you had setups on the gold, euro. We do all our analysis on 360 degrees. We don't just look at gold. We were famous for at $87 oil, saying you want to go short oil, long gold. That's a 2-year trade now, and it's given you on both legs. Think about that TLT chart I showed you divided by gold. Imagine you've gone short TLT, long gold. How are you winning on both sides of that trade? And now we pivot, we look at it across the euro, and when I take you back here, and then one other point I'll make as an aside regarding your question about the shooting star, the big slap that you got in the metals. That's called a shooting star, and it is bearish. It's a very bearish, it's localized high. And the only way you can negate a shooting star and go back to being bullish is if you have a similarly volatile posing an opposite candle to the downside. And what is that? It's called a similarly volatile hammer. That means you continue trading down, down, down with great momentum, and you overshoot the mark and you get slapped all the way back up and you make a hammer. And that's exactly what you got. So typical candlestick analysis neutered the bearishness of that shooting star, and you're back up on reflation. So our YouTubes, people can go see this. I mean, there were just these 2 candles, and in fact, we called it before this week was even up, because this is a weekly candle. We called it when it was still a doji. That means that body was flat and it was slightly red. It was flicking red, and that we said that is sufficient of a rejection that you will go back to green candles after this. And that's exactly what you've got. You've had 1, 2, 3 weeks. So since that event, I will highlight that this is accurate. Let's take you into the gold euro. So we're in a current technical trade right now. And these are shorter term stuff where we are just maximizing and gaining additionally.
Yeah, and I will say, since we're talking short term, that we are taping this Wednesday, February 25th.
Yeah, very useful. Thank you for that. So let me just show you. I'll just attach that as well. I mean, just in that time, that's a 4.5 million trade just from getting in on this one platform, and I run multiple platforms, just getting into this upside HVF move here that we've made. So let me draw that setup for you, because that's worth just in what the market's done for us, and that I'll be turning into further stack and 1 or 2 other assets and maybe some fun and games. But we're doing this for our community members as well, and we've got so many people so happy.
So you're thinking about not just I'm bullish gold, you're looking at the cross that you like that to trade that on.
Yes, and they will all go up because gold will win against the dollar too. But this particular setup is better than it was on the dollar. So I wasn't beating up on the dollar against gold here. I took the euro, and we also took the Australian dollar. And I'll illustrate that. The reason why it was slightly less perfect on the dollar is you went higher here. We must have the highest point here. So this is essentially a 3 impulse. We call it the HVF. It's after yours truly, Hunt. And then the other keywords are volatility and funneling, HVF. And we got a recovery, and we were calling bull bias. And you can see how beautifully it worked. I mean, you went up. You see this little red candle? It made our first interim target. That's that little dotted one. It came back into range, and then it went up, and it's made our second interim. You get a bigger, it's a more serious target. You get your significant pullback, and then we are anticipating it to run through the 4,573 euros. Remember, that's not a dollar, so different denomination. Very similar structure set up, neater and tidier this one was against the other fiats, and it was totally justified because you then ended up getting the rally in the dollar. And the good non-farm payrolls number. I don't know what payrolls are going to give out on any given day. I'm not sure any of us do. I'm going to just leave the broker and get the Aussie again and show you how that was, how it worked for both the euro and the Aussie. The dollar was actually slightly bit firmer during that particular tactical trade.
So you're really having to. So I think this is very important. We always say understand your time frame, right? And so if you're shorter you have a shorter horizon and you're willing to have more of a trader mindset, really have to think about this, based on what's happening short term in currency markets, because you can get waves that will maybe not work as well, even though you're in a large move.
Bull
When you're,
market, yeah.
you're looking at the gold silver ratio, I understand that you've got a view that's a little bit different than other
Yes.
people. What are you watching? Why are you watching it? And what are you seeing there?